Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Monday, June 17th, 2024. Appreciate you coming by and watching the quick podcast today. I had a really good trade today on MO, which is Altria Group, on the 5-minute charts using a higher low V2. Thursday, I believe, was my last video. Maybe it was Friday, but I had a higher low V1. But today we're doing a higher low V2. Now, the requirements for a higher low V1 or V2, first of all, let me point your attention here to this top green line and this bottom green line. Anywhere beneath the top green line and above the bottom green line is considered the value zone. And I have a couple different strategies and approaches that I use the value zone. One is a return to the value zone, sideways motion V1, V2. This one is different. The first requirement is that we must first close below the -1 ATR channel, or the bottom green line, which we did. Then the second requirement is we need to come into the value zone, which we did. Third requirement is that we need to pull back and then create a V1 or a V2. This is a V2. V2 consists of 3 bars. Bar 1, bar 2, bar 3. Bar 1 has to wash out, or in other words, go below bar 1's low. And then bar 3 has to close above bar 1's close. And when you're looking to get long something, if you buy a lower low, like this is a lower low, what it tends to do is it tends to bounce and then come back. Not all the time, but more times than not, that's what happens. But when you have a higher low, and this is called a higher low because this low here, this is certainly higher than this low, higher lows tend to trend. So when you're looking to get long something, a higher low entry is always better than a lower low entry. If you're looking to short, a lower high is better to short than a higher high. Okay, so again, we closed below the value zone, we came into the value zone, we had a pullback, and we created a V2. And if you'd like to learn more about V1s, V2s, just look at my YouTube channel in the lessons playlist under V1s and V2s, and I have a whole video there. So I did enter here at 44.20. Now, when I enter, I always place 2 stops. The first stop is what's called the emergency stop. I always place that exactly 2 ATRs below my entry. Okay, so 2 ATRs below my entry is where I place the emergency stop. The end of day stop is much, much closer. The end of bar stop, I should say, is much, much closer. And on a V1 or a V2, it's a close below halfway of the washout bar. You can see this is the bar 2 that washed out bar 1. Halfway is this red line here. And if it simply just, after I buy it, if it simply just closes below that line, I'm simply out of the trade. So it's a good risk to reward ratio. So again, the 2 stops are a 2 ATR emergency stop on a V1 or a V2. The end of bar stop is closed below halfway the washout bar. Now, let's talk about profit. Well, if I'm maximally going to lose 2 ATRs, and I should say only about 5% of the time are you ever going to hit your emergency stop, but right, that's what I'm allowing myself is a 2 ATR stop. So my profit should be more than that, and minimum for me is 2 to 1. So if I have a 2 ATR emergency stop, I want to put myself out at a 4 ATR profit target. So it's a 2 to 1, so it's an asymmetrical rest. So as soon as I take this trade, one of 4 things going to happen. 1, it's going to close below my end of bar stop. That's one option. 2, it's going to hit my emergency stop. 3, it's going to reach my target, my 4 ATR profit target. Or 4, it's not going to hit any of these, and it's just going to kind of mull around in here, and at the end of the day, I would sell it just as long as it hadn't hit one of my stops, right? Or it hadn't hit my profit target. But in this particular case, it did reach my profit target there, almost got the top of the day, and it was a really nice trade, and it was about 49 cents to the upside, so 1.11%. But the thing about higher low V1s, V2s, and when I learned these from a gentleman by the name of Kerry Lavorne, and he told me, he said, when you enter a higher low V1 or V2, sometimes it's going to come back and test this halfway, but oftentimes when a V1 or a V2 takes off, it just goes. You can see I was out of the money a little bit on the trade here, but for a very short period of time. So keep that in mind when you're looking to get long something. Buying the lower lows tend to bounce and then fail, but higher lows are the ones that tend to trend, and this is a very good example of that. So hey, I hope you found this helpful. If you did, I'd appreciate it if you could hit the thumbs up button. Really helps out the channel, lets YouTube know there's some valuable content. If you'd like to learn more about my trading, I have a podcast on the weekend on YouTube where I go over all the trades that I made last week, when I entered the trade, what the setup was, what the confluences of signals were, similar to right here on these intraday trades, but it's about an hour long, so I have a lot more time to go in and explain what I'm doing, and then how I'm going to manage the trade going forward, either to the upside, downside, stops, profit targets. But I think you'll find it helpful. And then after that, I talk about the trades that I'm looking for in the upcoming week, both on the daily and the weekly. And swing trades today did very, very good, both the longs and the shorts. So if you have some time this weekend, come by, check it out, and appreciate you stopping by today, and have a good rest of your day. Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.